What's up? So, unless you've been living under a rock, you've been hearing way more about GameStop than you ever have in your entire life, at least since you were a teenager, and they try to give you pennies for, anything that you try to turn in. So, lately, there's been this whole ordeal that's been going on with Wall Street Bets, with GameStop, that it's impossible not to notice. So, in that context, there's been a lot of rhetoric that's come from different people on like Twitter, like Dave Portnoy specifically, different people on CNBC, people on the left, people on the right, economic libertarians. Everyone hates this situation. Nobody is happy about it. And I think it's really emblematic of what's been going on within the United States and has really come to the forefront, especially with the pandemic and how unequitably the gains and losses from the pandemic have been spread throughout society. And it's been set up as this, and postured as this is the people versus Wall Street. And this is about, the pinstripes versus in the suits versus, the normal people. And I want to really dispel that myth because I think that it's very idealistic and disconnected from the material reality that is happening before us. So specifically, I want to say that when you look, and definitely check out the Plain Bagel on YouTube, much bigger channel than mine, but really, really good stuff. He did a great video explaining why there are plenty of people that are not retail investors that are taking advantage of this, because just the strict amount of volume and the amount of money that's being pumped into these stocks is not from normal people. And it doesn't really matter whether or not it is, just so we're clear. But because that's not the point. The point of this is that this whole situation is exposing the problems and the inequities within our system because of the fact that we have a market-driven system that is controlled by the people that own the most capital, i.e. what capitalism, promotes. And so I think the bigger picture here is understanding that this whole situation is exposing the ills of capitalism in the United States. And I think it's very important that we understand that and we make sure that we are very specific and clear, and we do not allow scapegoating of other groups, people, that type of stuff. This is very clear, and I'm going to be specific now. So the financial media has been talking about how smart money could be using Wall Street Bets to manipulate the stock price. And let's understand, they definitely are. And that's the way that they're going to try to attack retail investors, is they're going to try to use this to, create regulations to prevent people from talking about stocks online, most likely, and other things like that, any way that they can to avoid actually regulating the people that were very, making risky bets over shorting companies to essentially kill people's jobs. They're not going to do that, and that's why you see the pushback you have from hedge funds. So let's understand that this type of momentum, a lot of what happens in stocks these days is algorithm driven. You have momentum algorithms that are definitely picking up on this, that are taking advantage of it. And again, I've said this in past video, good for them. I don't really care. That's cool. We need to move some money around anyway. But let's understand, it's not normal people or workers versus capitalists in this case. It's capitalists versus capitalists, and there are plenty of retail investors like myself that are buying into these stocks, but we aren't the ones moving it. And I want to be very clear about that. So let's look at some financial media rather, that has been talking about this and get some insights to see what people are saying. So there's this guy named Chamath Palihapitiya who usually comes on. He's got some pretty good takes as far as a person who's a billionaire on CNBC or Yahoo Finance. He tends to say some things that sound pretty good. Kind of reminds me of Andrew Yang, regardless of your opinion of him. I think that he's kind of idealist and not... Anyway, let's listen and see what he had to say about this.
I think that what you're seeing is essentially a pushback against the establishment in a really important way. you have a lot of people, and I would encourage anybody who is dismissive of this thing to go into Wall Street Bets and actually just read the forums. And I think that you're going to see three kinds of posts. The first kind of content are a lot of people doing some incredible fundamental diligence on companies, trying to think about long-term value. And in my opinion, many of them are doing as good and frankly a better job than a lot of hedge fund analysts that I work with. That's number one. The second are a lot of people who believe that, coming out of 2008, what happened was Wall Street took an enormous amount of risk and they left retail as the bag holder. And a lot of these kids were in grade school and high school when that happened. They lost their homes, their parents lost their jobs. And they've always wondered, why did those folks get bailed out for taking enormous amounts of risk and nobody helped and showed up to help my family?
Yeah, and just so everyone's clear, that is me. My family did lose their house in 2008, and it sucked. And I was in the 9th grade at the time, and yeah, it was it sucked pretty hard. And I think a lot of people that are I'm 20, I'm gonna be 20. What am I? I'm gonna be 28 this year in like a month. Yeah, a lot of people that are millennials around my age, we know how it is, and the people that were a couple years ahead of me that were graduating, college into that market, graduating high school and graduating college into that market, even worse.
And then the third thing is a realization that instead of having idea dinners or, quiet whispered conversations amongst hedge funds in the Hamptons, these kids have the courage to do it transparently in a forum. And I'm not saying all of it is perfect by any means, but I think it takes an enormous amount of faith in the...
And that's kind of what I want to focus on is, that's the whole point, is that the idea dinners, which is essentially where these different hedge funds and different people that are in know each other within Wall Street will meet together to discuss different strategies and what they're doing, and essentially legally collude to figure out what makes the most sense for them. And there's no difference here, in my opinion. And I'm glad that Chamath is saying that. But there are other people like Andrew Ross Sorkin who pushed back on that idea.
Today. And Chamath's take was, Redditors did out in the open what the bigs do behind closed doors, move a stock. If it's good for fund managers at idea dinners, why not for day traders on Wall Street Bets?
Look, I think that I caution those who are out there thinking that they should buy into this stock, because the truth is that there's no fundamentals behind what's happening here anymore.
Right.
And we can decide that the hedge funds that have gotten together over the years have created their own fictions in truth as well. But at the same time, there was some fundamental basis for what they were doing. It wasn't just made up out.
Now, this is just patently not true. There have been plenty of times where companies, 2008, there have been plenty of times, though, where companies just straight up gamble on stuff because they can. And it's profitable to do so. And often, especially when they're able to get retail investors to buy in and then leave them holding the bag. This happens all the time. This is not something that is controversial. And honestly, please stop clutching your pearls, Andrew Ross Sorkin. This is disgusting. Here's the reality. Nothing that people on Wall Street Bets did is different or worse than the people on Wall Street doing the same thing. Okay. The difference is that the people who pay his paychecks are the same people that are in bed with, those capital owners. And yeah, I understand why he has to, why he's saying this, but here's the reality. Stocks, let's just understand something. Stocks are, because of the way our economy works and because of the fact that we have, so few people in the United States have pensions, because, we have not good health care, because people that retire have to worry about paying for those expenses, not have pension funds. We have housing that is not going to be guaranteed for seniors. We have Social Security constantly get eroded. We have to invest in the stock market. Sadly, it is a necessary tool. And that's why I wanted to talk about that on this channel, is to focus on trying to get away from this, fetishization of it, but instead focus on, here are the concrete things the average person can do in order to hopefully have a less stressful life and have better financial future. But stocks are a necessary tool because we need them in order to keep our money protected from inflation. Because the reality is that because our money is a printed fiat currency, it is not going to hold value on its own, and it is always going to experience inflation, which means that effectively your dollars are getting eaten away at least 2% per year on average, right? So understand that, but then let's also say that while it's necessary, it is gambling. The stock market is absolutely gambling. That being said, it is a fairly safe bet if you're doing it by investing in index funds, and a mix of bonds and other things that, generally speaking, are going to go up over time, right? But it is gambling, right? So pretending that, oh, there is a difference, there's not, okay? There are when he's talking about fundamentals, I tend to be more of a fundamental investor, meaning that I don't tend to go for stuff that says risky. All a fundamental investor means is that I'm looking at a little bit more numbers than other people, and the numbers that I'm looking at are mostly focused on mitigating risk as opposed to maximizing profit. That's the difference, right? Yes, you're looking to maximize profit in both ways, but a fundamental investor is looking a little bit more at how do I allocate my risk and how do I balance that out. That's kind of the difference. I've done videos on value investing, which is fundamental investing, versus growth investing. Check them both out if you want a deeper dive, but that's the basic idea. So again, stop clutching your pearls. Spare me the hysterics, Ross. And that's the problem. That's the whole point. The reason that they don't like this, they being financial media and hedge funds, the reason they don't like this is because this is exposing the problem with allowing a market run by the richest people to control whether or not working people have access to basic material needs, okay? Like housing in 2008 again, right? Or healthcare. Those things should not be tied to a market function because this is what this can happen to literally any commodity or any company if there are risky enough bets placed on it. And that is because it is tied to a market, right? Now, regardless, what I want to leave you with is good. Fuck them, okay? And be careful not to get caught up in the hype. Make sure to stay level-headed and to focus on what you need to do in order to make sure that, you don't get caught up in this type of risk and you end up holding the bag. And yeah, just enjoy watching from the outside. And personally, I'm holding those stocks because I kind of have a little bit of, I have a sympathy for it. And I did a video on that, so check that out. But, I'll be holding the ones that I have. But I definitely want you to be very careful and make sure that you do all the research you're supposed to, because this is not financial advice. I'm not a financial advisor. And regardless, you should definitely always question the information people give you and make sure that you understand it as fully as possible. But again, what I want to leave you with is the problem with what has happened with GameStop, with Robinhood, with hedge funds. It's not a problem with hedge funds doing something different than what they're supposed to do. It's not a problem with Robinhood doing something different than what they're supposed to do. It's not a problem with people on Wall Street Bets doing something different than what they're supposed to do. All three of these people are doing, these types of people are doing exactly what they are incentivized to do within a capitalist market-driven system. Capitalism, it rewards capitalists for protecting their capital. So it doesn't matter if a bunch of people on the internet are trying to take it or if the government's trying to take it. They will do what is necessary to intervene, whether that is shutting down trading on a stock, whether that is trying to use virtue signaling to say that, oh, there are people in this group that are misogynists, therefore it's, you should think of them as bad. Let's focus on what is wrong. Let's focus on what the problem is. And the problem here is capitalism and the way that it works in the United States, and the fact that our livelihoods depend on a market that is controlled by people who have way more money than any of us will know in our lifetime. If you enjoyed this clip, be sure to leave a like, subscribe, and check out the full live version of the Wealth for 99 podcast, where we talk finance, economics, and public policy from a working class perspective. We'll see you there.